Global stocks are down as investors wait for the U.S. Federal Reserve's move on interest rates later this week. In Asia, equities are red across the board, led by Japan's Nikkei index. It snapped a 7-day winning streak to fall 0.7%. Oil prices are also declining, with the international crude benchmark Brent dropping 0.6%. The decline in markets reflects pessimism over global economic prospects. The U.S. Fed is expected to raise interest rates by 75 basis points this week to keep a lid on consumer price hikes. Investors are also waiting for U.S. GDP data for the second quarter. That'll be released on Thursday and, according to most forecasts, will show that the world's largest economy shrank in the 3 months to June. Now for more, let's go to Han Tan, Chief Market Analyst at the Exinity Group in Abu Dhabi. Welcome back to the program, Han. Now, all indications pointing to a recession in the U.S. Can you tell us how is this going to be different from more recent slumps that we've seen in the world's largest economy, particularly the one caused by COVID and the 2008 financial crisis?
Yeah, so overall, this next recession, if it happens, is not expected to be as deep compared to the recessions that you cited. So it's more about the duration, more so than the depth. But perhaps the bigger contrast is that this next recession could be accompanied by higher interest rates. And that word could refers to whether we could see a recession and not so much the interest rates, because we know they have been going up, right? So typically in a recession, you have a Fed that's cutting interest rates, but this time around, it'll be the opposite.
So what does a slowdown in the U.S., coupled with higher interest rates, as you've mentioned, mean for other economies that do a lot of business with the Americans, particularly emerging markets?
Yeah, so as we have noted, look, we have seen a period of higher US dollar, and in pretty much the greenback is just about the only thing that's up in markets right now. At the same time, we expect wobbly risk assets, right? So going back to your question about what it means for emerging markets, I think with this stronger dollar, besides impacting these emerging market currencies, it also could mean that the US then exports inflation to these, or not just to these economies, but to the rest of the world as well. So it's not just an FX challenge, but an inflation challenge as well.
All right, Han Tan joining us from Abu Dhabi. Thank you always for your analysis.
My pleasure.